Hey everyone, my name is Eric Jones, better known as the Turf Teacher. Welcome to the course entitled Business Structures. This course has been given course number 2687 by the North Carolina Landscape Contractors Licensing Board for one business credit for licensing year or continuing education year, August 1st, 2023 through July 31st, 2024. So these courses are good for 1 year, and then we rotate them out on a 3-year rotation. So this is a brand new course. You haven't taken it, and as long as you're taking it before July 31st, 2024, you are good to go for your business credits. So this course is kind of dear to my heart, meaning that, as we go through life, we're going to have different circumstances that come up, different life situations that we may want to change how we operate our business. We may start off as a sole proprietor, which most of us do in the green industry, meaning, we're running everything through our personal name, or we may be doing business as, you could be doing Eric Jones DBA Turf Teacher, or DBA Elite Landscape Contractors, which is our company name now. But as we grow, as our business grows, as we start having families, as our kids get older and move out, there's different times in our life that we may want to revisit and change the way we operate our business, or how we incorporate it, or LLC it. This is what this course is about. Now, please note, I'm not an attorney. I'm not a CPA. I'm just giving you information on these structures. I highly recommend meeting with your accountant, meeting with your attorney, and talking with them and letting them kind of help you make that decision. Get their advice as well. I'm just introducing you to the different structures that there are and telling you why I like some, why I dislike others. They're all good. I mean, they really are. I tend to lean away from the sole proprietor just for the liability protection, but the rest of them are 100% A-OK to run your green industry business. So let's go ahead and get started with the course. I will bring in examples of why people have changed their structures and why they should have been one instead of the other. That's the best thing about going around meeting with you guys and gals in the green industry and having these seminars, is that I get to hear stories from y'all, from the front lines. We've had a lot of things change here, recently with the passing of my father. So we're in the midst of changing up how we operate the farm, our landscape business, and our consulting business. So like I said, life changes, and that's okay. The only constant is change, and we just need to keep some of these things in the back of our mind. And when we do meet with our accountant and our attorneys, bring these questions up to them. And so we're going to start off with the course objectives. We're going to talk about the sole proprietorship and what it is. And like I said, most of us in the green industry started out as a sole proprietor. My mother and father started Elite Landscape Service and Nursery as a sole proprietorship, and then hence moved to an S corporation, and now we are a C corporation. So, and I'll tell you the story of that when we get to these individual structures. We're going to talk about partnerships. Very seldom do I see partnerships in the green industry. The only time that we may see a partnership is when two licensed landscape contractor companies may form a partnership to do a larger project together. Or you may see a design firm, landscape architects may form a partnership, or they would form a professional partnership or a professional LLC. Again, we'll talk more about them in detail when we get to each slide about these structures. C corporations, that's what I am currently running the business as. And I'll tell you why in a little bit. I did meet with my accountant or my bookkeeper. He is a retired CPA, now working for my current CPA. He's 80 years old, and I dread the day that he retires, 100%. But he said working keeps him young. But I meet with him, periodically, once every couple weeks, buy him lunch, ask him information, and just get that knowledge that he's got between his ears to help me make some of these decisions. And he keeps our books, and then he turns it over to the CPA that he is actually working for part-time now. But a C corporation, people don't like that because of the double taxation. We'll talk more about that here in a few. I love a C corporation. It's really its own entity, separate from everything else. It can own property. It can own vehicles. It's like a living being. And if something happened to you, it's still going to exist. S corporation is basically a entity or structure that you will form with the IRS after you've created the C corporation. So anytime you create a corporation, it's going to be a C corp automatically. You have to file for subchapter S with Internal Revenue Service to get that S classification, which basically in a nutshell means that profits and loss are going to pass still through your personal tax returns. That C corporation is going to have its own return. So that's where people get, the confusion, or not confusion, but reservation about having that C corp, because they think they're going to have to pay more taxes. Some years you might have to, but you've got to be involved with your accountant and actually do tax planning to kind of help you limit those tax liabilities that you may have. Limited liability company, becoming very popular in the green industry, becoming very popular with home builders, and definitely becoming popular with real estate companies. And when I say real estate companies, these are the property management companies that we're working for. We do a lot of work with a property management group out of Charleston, South Carolina. And when we work for their properties, each one of their properties is the actual street address, LLC. So it could be 123 Main Street, Winston-Salem, LLC is the actual name of the property that we're maintaining. And we actually bill that LLC, even though it's owned and operated by the parent company out of Charleston. So many people are putting their real estate in LLCs. And I asked my accountant the other day when we were having lunch, I'm like, thinking about getting back into home building. I love construction, guys. Green industry is my passion. That is, will always be. But you talk to a lot of the wealthier landscapers out there. Tony Bass, a good friend of mine, every time I see him, he's talking about landscapers should be investing in real estate. Well, this real estate, you need to put in an LLC. Not collectively every single house or property that you own, but each property needs to be its own LLC. Again, we'll talk more about that as we proceed to the slides pertaining just to the limited liability company. Then we'll have a summary of business legal structures. We'll kind of recap everything at the end of the lecture. We'll have joint venture discussions, and there you might, kind of relate that to the partnership. But you can form a partnership, or you could do a joint venture as well. And then we're going to talk about naming your business. And there's a lot of reservations about, hey, do I name my company after my own personal name? Do I give it its own identity? And I have mixed feelings about that, because one time as a home builder, I was Eric W. Jones, Inc. And I was a C Corp. And we were building some pretty substantial homes for people, 750,000 plus, and, had a great time with that, and did this way before, I ventured off to join the U.S. Army. And then with the housing crash that started happening 08, 09, turned in my license and said, I'm done with this, because, that was a scary time in our business. Like, we didn't know what was going to happen, so kind of slowed that business down. Went in the Army, retired Army, and with the years that I had in the Navy, all those combined to get the full retirement. But as soon as I got out of the Army, I went back and got my building license. And is I'm thinking about that. And so my accountant again the other day at lunch was saying, "Hey, let's ask Alan, the CPA, should we do S corp or LLC for the actual building company?" But he says, "I know for a fact if you are going to have some rental properties, you would want each of them in an LLC." And then we're going to talk about registering your name in North Carolina and actually how you would do that. So it's as simple as driving down to the Secretary of State's office and filing the paperwork there, or you can go through one of these online companies that you can, pay a few $100s and they will take care of everything for you. Just be careful when you are creating a new company and registering your name with North Carolina that they don't assign you what they call a registered agent. You want to be the registered agent yourself for your company. All right. And so the sole proprietorship, the number one business structure, business entity, probably in the green industry today. Why? Because it's very easy to form. Second, there's no paperwork other than, filing a doing business as, if I would want to set up a sole proprietorship, I would say I would go down to my register of deeds and fill out the paperwork and say, "Hey, Eric Jones doing business as Eric's Landscaping." Simple as that. You're in business, you've got that piece of paper. You could actually go open a checking account that's got Eric's Landscaping on it. And it's just the way a lot of people in the green industry do it, because we're single owner operators, meaning we don't have any employees. If we do, it may be one or two. We're very, very small when it comes to that. And I see this industry going that route a whole lot more. Maybe not with the sole proprietorship, but meaning the smaller mom and pop companies. We're going to do what we can do ourselves because of the help situation. We're just going to keep it small, and we're going to do the things that we want to do, the things that we like to do, and the things that's going to make us the most money. And we're going to stay away from this massive mowing. And that's going to be turned over to the larger corporations, the ones that are merging and the consolidation of the larger companies. So we're going to have these massive landscape companies, and then we're going to have the smaller mom and pops. That's how I see the industry moving towards. But you're the sole owner of the company. You make every single decision. It is the simplest form of ownership to set up. Like I said, it's walking down to your register of deeds, filling out the paperwork, and opening up a checking account. It does expose you to unlimited liability for business debt, though. So if there's any bankruptcy that you may have to encounter, it's going to be a personal bankruptcy because it's your personal name attached to everything. And it can get a little scary, not only from that standpoint, but the standpoint of liability. You may be in your truck pulling your trailer, and whether or not you've got your, trucks lettered up Eric's Landscaping. Remember, I formed that DBA, that sole proprietorship. But what if I'm involved in a massive motor vehicle crash? Let's say somebody's really injured, or worse, somebody passes away because of the crash that I'm involved. Really, no matter who's at fault, I'm in a business truck. I've got a trailer. I've got lawnmowers on it. Or I'm pulling a tractor, whatever I'm pulling. People are automatically going to think, here's a business owner that's got money. So you're going to get sued. And however it goes, and especially if it is my fault because of the wreck, everything that I own personally is liable to pay the medical bills or death benefits for those people that were involved in the crash as well. So I could lose my house. I could lose retirement accounts. If I was married, my spouse's income and retirement, all of that could be up for grabs. And so that's one of the reasons I don't tend to lean toward these sole proprietorships. I know they're fast and quick and I mean, you could literally be in business operating as a sole proprietor today by walking down to, Register of Deeds clerk down there and getting it all set up, and then going to your bank, and boom, you've got some starter checks, you've got a business account open, you are in business. But it can get you in trouble. Now, with this sole proprietorship, and I know you guys have heard me talk about this before in previous classes. I knew of a guy local to this area. I'm not going to name the town, not going to name the individual, but the individual worked in a factory, Monday through Friday, doing the typical job for that small community. Was doing pretty good, working his way up through the factory, but realized that he could actually, make a few dollars, by cutting lawns in the evening and on the weekends. Well, this young man was mowing a property. It was on a Saturday afternoon. So, he wasn't working. He was trying to catch up, maybe get a little time off Saturday afternoon, but was mowing and was on a corner lot at a stoplight in the town, the little downtown area. Well, picked up a rock, and that's a sad situation. There was a rock big enough in that lawn that his mower picked it up and shot it out and actually went through the glass, the passenger door's glass, and hit a smaller child in the head. Really, really messed this little girl up pretty much for life. And it was a sad situation for both parties involved. This guy was a good guy. He made a mistake. He'd made a mistake. He picked up a rock. It went through the glass, and it hit this little girl, who's now going to be dependent on somebody pretty much the rest of her life. Well, this man, being a sole proprietor, doing this part-time, didn't have the liability protection of an LLC or a C Corp or S Corporation. He was exposed. Everything was up for grabs. And not only did he not have the liability protection in place, he didn't have general liability or even workers' comp insurance. He knew nothing about that. But he was operating as a business, as a sole proprietor, and he didn't have those in existence. Well, he lost his house, he lost his equipment, he lost his vehicle, his wife left him. So, both sides of the situation, I feel sorry for everyone involved. This could have been prevented if he had just had general liability and actually formed a true business where he could have protected his personal assets. The young lady and her family would have been taken care of by the insurance company, number one. And when that ran out, they could only get what the company had. So, guys, I'm all about protecting ourselves. That is a scary situation. But with these sole proprietorships, the existence as the sole proprietor, you own all the assets of the company. Now, even in C Corps, LLCs, you may have to personally guarantee some of the equipment purchases that you make. But as the sole proprietor, it is 100% yours. You're the grantor and the owner. With financial management, business and personal expenses must be separated. Careful records must be kept. That's the tricky thing, because that's never going to happen. And even as a corporation, you still have to keep everything separate. You can't make the mortgage payment out of your business checking account if you're a C corporation. You've crossed that corporate veil right there, and everything's up for grabs. Everything must be kept separate, no matter which structure you formed. Liability. As that sole proprietor, you are personally liable for all actions taken in the name of the business, even if it was one of your employees, even a part-time employee that you had just hired for today, a part-timer only helping you on Saturdays. If he had picked up that rock and it went through the passenger side door and hit the little girl, you would have still been responsible. guys, you've got to have the insurance. And I know when we go back and look at our what we pay in insurance, it literally makes you want to get sick sometimes. You know, not only, with the vehicles that we are running up and down the roads, but our inland marine, our workers' comp, our general liability, our bonds, that we have to keep in place to do some of this commercial work. We spend a lot of money with our insurance companies. And then taxes. Your net income from the business is recorded as ordinary income. Corporate or sole proprietors do not pay corporate income tax, which, guys, that can really help you build that personal tax return. If you're looking at building a house, if you're looking at, getting married and purchasing some land and building that dream home for you and your spouse, this is a good way to build up that personal income. You can still do it as a C corp by paying yourself a salary, but every single thing that runs through the business is going to run through that personal tax return as ordinary income and as ordinary loss. What if you had a loss one year? So you may get some money back. Advantages of the sole proprietor: minimal legal restrictions. You're not having to fill out a bunch of paperwork or anything like that. Everything is pretty much simple to form, and it is simple ownership form. I mean, you exist. Everything is owned by you. Every decision is made by you, and every dollar and loss of a dollar will run through that personal tax return. Low startup cost. You're not having to spend much money to get that set up. I forget how much it costs to set up that DBA, but you got to take a little bit of personal money, $100, put in a business checking account, and actually you're in business. You own all the profits. You don't have to share it with any shareholders or people that has invested in your business. If you were larger, everything is yours. And the best thing about it is the freedom to make all of the decisions. You don't have to ask anybody, except your spouse, who's usually involved with the business, pretty much, especially the smaller businesses like that. And that melts my heart. I love seeing a young couple grow together, start a business together, and they both put their heart and soul into it, and they're building something that's going to, make them a lot of money and help them raise a family and own property and stuff like that. It makes you proud to see that happen, and to see that happen to somebody in the green industry, because this is hard work, guys. This is hard work. So the only person you're asking, is your spouse. But please take the protection. Go from this sole proprietor as quickly as possible and move up to an LLC or a corporation, whether it's C or S. Disadvantages of the sole proprietorship: unlimited personal liability. Like I said, something happens, you're 100% responsible for it. If you are the C corporation, that doesn't mean that they can't come after that, especially if you've pierced that corporate veil. If you haven't dotted a I or crossed a T in one of those contracts or something, I mean, the attorneys are going to look for everything. And I actually had an individual in one of my seminars in Raleigh a few years ago, pre-COVID. It was right before COVID, and had his two best employees involved in a wreck. One of his employees, died at the scene, and the other one spent months um, in the hospital, recovering from his injuries. And they were involved in a wreck with another landscape company. And it was heartbreaking. And to hear this, my dear friend talk about this, because he teared up and was still very, very upset with this, because this had just been a few months later. This happened like in November, and he was in the class in January. And to see and hear him talk about the lawyers coming in and basically going through everything. And what they were doing is seeing if they had pierced the corporate veil. And he said, Eric, my stuff was tight. I knew I had to keep good records and not cross over any lines, and they couldn't really go after his personal stuff because he was protected and he did the thing right. If it had been a sole proprietor, that wouldn't have happened. less available capital. Basically, what that's mean, it's only what you have. If you're a corporation and you can get some people to invest in your business, or you have a partner, that's when your capital can raise. As the sole proprietor, it's only what you have. Possibility of not getting some long-term financing. Again, a lot of this happens um, because your debt to income ratio might be not what the banks want to see. You may have already borrowed too much, and you may need that new piece of equipment, but you can't because you're already financed out. Dissolution of the business in the event of the owner's death. If you die, yes, because usually the sole proprietor is the single owner operator doing the work, doing the books, wearing all the hats of a business owner. So if something happens to you, something happens to you. There's nobody there to take over. Partnerships. All right. This is a relationship between two or more persons who joined to carry on a trade or business. So, like I said, I've only known of one landscape contractor to be involved with a partnership. They formed a partnership. It was a landscape contractor with a turf care professional. They merged and formed a partnership. And so they still had their individual like names for the landscape company, and then they ran that lawn care company with that name, but they were all underneath that same umbrella of the partnership. Each person will contribute money, property, labor, or skill. And in this case, both of these individuals had some money, but they had the skills that both of them wanted, and they wanted to bring all this together in one house. Each partner expects to share in the profits and loss of the business. So if there was, profits made, that's still going to, pass through their personal tax returns. There are two types of partnerships: general and limited. And a general partnership, that's basically you're you're responsible for each other's mistakes. Limited is you're only responsible for the amount of money that you've put into the partnership. And I tell this story of parents, sending their kids to school. Let's say little Bobby is in high school. He's like, Mom and Dad, I don't want to go to college. It's not for me. Well, son, we've had some money set aside for you to go to college. What is it that you're wanting to do? Well, Dad, I want to start a landscape contracting business. Son, that sounds pretty interesting. You've picked up a few lawns during the summer, and you've made a little bit of money, and we're proud of you for that. And well, son, since you're not going to college and we have these funds set aside, how about we invest in your company and let's form a partnership? Well, Mom and Dad would be limited partners. They can only lose the amount of money that they gave their son to start the business, whereas the son could lose pretty much everything that he's put into it. If he's bought the mower, if he's bought himself a truck, if he's in a wreck, they could come after him for stuff, but they could only get what the parents actually put in because they are limited partners. Key characteristics of the partnerships: existence. A general partnership can be formed through an oral agreement, but it is recommended that a written partnership agreement be made. You would want it in writing. General partners own the assets of the company. The limited partners have limited liability in the company. So, again, Mom and Dad have very limited liability of the company. They're only going to lose that 50 grand they had to set aside for little Bobby's college. The general partners will own the assets. A partnership will exist as long as the partners agree it will, and as long as all the general partners remain in the partnership. Even death will dissolve the partnership. So if one leaves or dies here on that last sentence, all of the assets of the partnership must be sold or distributed to pay creditors, and the rest goes to the partners. So it has to dissolve. Now, typically, what partnerships will be what they have: key man life insurance, or key partner life insurance. Not going to, forget, it depends on how many partners we got. So each of the partners are going to have a life insurance policy on each other. Because you think about it, let's say And this happened to the dog's vet. But let's say a landscape contractor and an irrigation contractor teamed up and formed a partnership. And soon after the forming the partnership, things are going great. They're making money. Both partners are happy. The landscape contractor knows his irrigation jobs are getting done right. The irrigation contractor feels good because he knows, there's going to be a beautiful landscape that he's keeping alive. And, they just have a great partnership. Well, let's say the irrigation contractor passes away suddenly. You never know what's going to happen to you when you wake up each morning. Car wreck, told you've got terminal disease. You never know what's going to happen each morning. But let's say the irrigation contractor passes away. Well, together, these guys were able to buy a bunch of new equipment. They were able to expand the shop. They were able to get a few more trucks to put in the fleet. I mean, they were rolling in the business. But the irrigation guy dies. Well, he's put all his heart and soul into this partnership, so his family is entitled to that. Well, what if the landscape contractor still wanted to maintain everything as is, and then just find another irrigation contractor to keep that side of the house going? Well, if they had like Keyman life insurance that the partnership was paying, this could be how the landscape contractor buys out the irrigation contractor's family. If he had like a $2 million policy, and the wife and kids were to receive that $2 million life insurance policy, she's okay with the landscape contractor to still run the business. Now, again, the partnership's canceled, but he's able to take that money and pay her off, part of her husband's ownership in the business. And she comes away with, the fruits of her husband's labor, and she's able to maintain the household and take care of the kids. So good partnerships will do that for each other. They'll have what they call that key man life insurance, or, key partner life insurance. Different companies term it different things. All right, financial management. The partnership should keep separate bank accounts and financial records for the business. That way they'll know if there's profits or losses to be made. An outside accountant for record keeping is highly recommended. And everybody should have an accountant. It's just the way it is. I would never attempt to do my books myself. Now, I'll do what my accountant says. Get me this information, get me that. Or, Mr. Moser, who is our bookkeeper, who then gives it to the CPA, give him everything that he needs. But as far as sitting down and doing the balance sheet and all that, I want my bookkeeper to do that. Liability. All owners in the general partnership have personal and unlimited liability for all actions and debts undertaken in the name of the business. So they're all responsible, every single partner. Each partner is responsible for the acts of the other partners when they act in the name of the business. Hey, what if the irrigation contractor and landscape contractor are still in business and, nobody passed away? Well, what if the irrigation contractor, got caught letting his license lapse and was pulling permits and actually got caught for it? Well, the whole partnership, everybody's responsible for that. Limited partners will have no personal liability for the business of the partnership, and limited partners are only liable for the previously agreed upon contribution or investment in the business. So again, mom and dad giving little Bobby the money to start the landscaping business, they can only lose what they've put into it. They couldn't come after their house. They couldn't come after anything like that because they are limited partners. Advantages of the general partnership: ease of formation, direct profit rewards, larger management base than that of a sole proprietorship. You've got 2 or 3 people, and a lot of professionals. And what I mean by professionals, I'm talking about accountants, attorneys, engineers, landscape architects. They like the partnerships. A landscape architect may partner up with a civil engineer because there's 2 sets of skills that they can combine and, market themselves for larger projects. Disadvantages of the general partnership: Unlimited personal liability of the general partners, multiple decision makers. So all the partners have to agree on when there's a big purchase or big decision to be made. Limited life of the business. If one of them dies or decides to leave the partnership, it has to be dissolved and a new one created. Changes of partners or partnership agreement may be difficult, especially if one's leaving, with a bad taste in their mouth. But you have to honor that. They can leave the partnership. And then it will dissolve in the event of death of a general partner. Partnership registration in North Carolina, limited and limited liability partnerships must register through the North Carolina Secretary of State. North Carolina based partnerships must also submit domestic forms of registration. And then foreign partnerships, meaning out of state partnerships and partnerships from other countries, must submit foreign forms for registration. So, other partnerships, a South Carolina landscape company could get registered in North Carolina so that they could, get their North Carolina license and actually do jobs in North Carolina. C Corps. It's what I'm running our landscape contracting business as now. It is a corporate identity. And if you decide to do business under a corporate identity, you will have to comply with the requirements of state law to create the corporation. A business assumes a corporate identity in North Carolina when it files with the North Carolina Secretary of State. So basically, you'd go to the Secretary of State's website, enter some names to make sure that your name is available, because like I have Elite Landscape Contractors, Inc. It's a C corporation. Nobody could go and file and get Elite Landscape Contractors, LLC. They can't do it. It can only be that one name. Now, they could do Elite Landscape Contractor because it doesn't have that S. It has to be an exact match. But what it is, you're creating that identity. It's like having a child. And really, all of our businesses is like having children. I mean, we nurture it, we feed it, we put money into it. We want to see it grow. We want to see it be able to run on itself, just like we do our children. But these C corporations from day one has its own identity. Elite Landscape Contractors, Inc. has nothing. I mean, you don't see the word Eric Jones in it at all, other than when I signed for it. But if I was a sole proprietor, Eric Jones, DBA, Eric's Landscaping, I'm tied to it. That identity still kind of belongs with me. Key characteristics of the corporations. Existence. Incorporation will give your business a legal existence. The business can own assets and conduct business in its own name. So, and think about this, and everybody gets kind of mad when they have to renew their license because they got to have a personal license and then their corporate license because, they are a business. They are a true legal business. And, you got to pay that extra license fee. But again, because there's two license there. And we're always doing work in the name of our business, right? And think about this, we have to have a personal license to get our corporation licensed. As a general contractor, because Elite Landscape Contractors also has a general contractor's license. We have a building contractor's license to pull permits for retaining walls and, the whole 9 yards. We want to make sure we're covered on every basis. But it's Elite Landscape Contractors, Inc. that has the license, not Eric Jones. Eric Jones has the landscape contractor license to be able to get a landscape contractor license in the name Elite Landscape Contractors, Inc. I'm only a qualifier for the GC, meaning I've passed a test, but it's my company's name that actually has that license. There is no personal and corporate license. I like the fact that the business can own assets. The business can own the skid steer. The business can own the building that you're running your business out of. It can own a beach house, because you're doing work at the beach, So you see how things can kind of help you along the way there. Corporation lasts as long as the stockholders determine it should. There are going to be stockholders, and it can really only be you if you want it to be. A corporation will continue to exist even if one or more of the shareholders dies. And so let's say you and your spouse want to form a C Corp and both of you are killed in a car crash. And guys, I hate going down these roads, but I want you guys to know that things like this do happen and you have to take care of the ones you leave behind. This company could still exist. And you may have a son that's 16, 17 years old that wants to continue that business. Well, that business is going to stay even though you and your spouse are no longer here. Your children could take that and run with it. If it was a partnership, it would dissolve. If it was a sole proprietorship, it would dissolve. So that corporation could continue if something happens to you or your spouse. Financial management, separate bank accounts for the corporation, always, always. Separate business records, always, always. The corporation, not the shareholders, owns the money that the shareholders pay to buy the corporation stock. All the assets and the money earned by the corporation, they are the corporations. Let's say when I formed Elite Landscape Contractors, and I dumped in $50,000 of personal money to get it started. That $50,000 belongs to now Elite Landscape Contractors. So I'm a shareholder because when I formed the corporation, I did that. But when I deposited that money, the corporation owns it. Now, yes, I'm entitled to dividends and all that, but I'm also an employee of the corporation, and that's how I make my living, is working for the corporation that I formed. Liability, the owners of the corporation, known as the stockholders, are not personally liable for the losses of the business. So what if the business does lose money? Yeah, I may lose that money I put in it to start, but if the business loses $100,000 and I only put 20 in, I'm not going to lose it's the company losing it. Corporate entity is responsible for business debts. So you do see a lot of people, go bankrupt or whatever, and it's the company, and it doesn't touch them personally. With taxes, the corporation must file income tax returns and pay taxes on profits, and then dividends paid to shareholders by the corporation are also taxed to each shareholder individually. And that's where this double taxation comes in that people do not like. They don't want to have that double taxation. But, work with your accountant. Again, it's called tax planning. If you're an employee of the company, you want to be taking money out all throughout the year. You don't want to wait till the end of the year and get it as a dividend check. I need money each month to pay my personal bills that I'm paying tax on when I write myself a payroll check. So that's one way to do it. Yes, still maybe a little bit costly, but I love that C corporation because that C corporation is its own entity. It has its own tax return. So my tax return is only reflecting on the money that I write myself as a payroll check. It may hurt me if I wanted to buy a beach house or, buy a condo where my daughters are going to college. I may not be able to do that unless I was to pay myself a little bit more money. S corporation, all that profit and loss would be running through my personal tax returns, and then I may be able to get that property. It's just how you want to do it. So I hope you see where there are times when you may want to change the structure of your business. And when you do that, you may have to change just a little portion of the name. I just talked about that. Elite Landscape Contractors versus Elite Landscape Contractor. Now, my parents were a sole proprietor, Elite Landscape Service and Nursery, for years. When I got out of college and was working full time, that's when we decided to incorporate, and mom and dad incorporated as an S corporation. They filed for subchapter S. They did that and still ran Elite Landscape Service and Nursery, Inc. Well, as I became more involved with it, we decided to get out of the nursery business, and we just ran a full service landscape contracting business. So we dropped nursery. We became Elite Landscape Service, Inc. Well, when dad got sick and got cancer and, met with the attorney, met with the accountant, hey, how do we keep everything going? How do we kind of transition? How do we get new equipment and stuff? He's like, you need to form a new company. And we had talked about doing this anyway because, we're now licensed landscape contractors. And I want people to know that when they hear our name, Elite Landscape Contractors. So we moved from Elite Landscape Service, Inc. to Elite Landscape Contractors, Inc. We're still got that Elite Landscape. It's the same logo. We just changed the lettering from service to contractors to make that transition a lot smoother. Characteristics of corporations. You got to have a board of directors and corporate officers. You yourself can be all the corporate officers, that and your spouse. Board of directors can be your accountant, can be your attorney, could be your financial planner, could be your insurance agent. These are the people that you want on your board of directors. Stockholders are the owners of the company, and that's going to be yourself. You got to have periodic board meetings, maintenance of board minutes, and approval of corporate resolutions. And if you're ever audited by the IRS, that's the first thing they're going to see. They want to see those corporate minutes. You just got to do that. Meet at Biscuitville once a year. Have your accountant meet you there, your attorney, run some stuff by them, write it down in that corporate logbook that you met on March 20th, 2024 at Biscuitville, 123 Main Street, Winston-Salem, North Carolina, and you discuss this, and that. You are now in compliance. A board empowered to authorize certain actions. Hey, borrowing money, entering into contracts, allocating corporate resources beyond routine business transactions. And so there you may want, with your board of directors, again, it can be you and your family, but maybe it's your father-in-law, maybe it's your dad, maybe it's your financial plan, people that actually have a vested interest in seeing you succeed. They may have to get a little tough on you and say, no, we're not going to buy this equipment. You're going to have to wait till next year. So you want that advice. You want that information from them. Advantages, again, separate legal entity, limited liability for the stockholders or owners of the business, unlimited life of the business. It's going to continue with or without you. Availability of capital resources. Yes, we went and bought a dump truck, a few months ago in the name of the business. I still had to personally guarantee it, but everything is in the business name. And then transfer of ownership through the sale of stock. And yes, you do have stock certificates, and they can be as little as you want them to be. They can be a penny or, a fraction of a penny, but you could sell those stock to your kids. You're basically transferring that ownership to them. Disadvantages of a C Corp: complex and expensive organization. I personally don't think so. Maybe it's because I'm used to it and that's how we're operating. It's not that hard. Limitations on corporate activities and decisions by the corporate charter. Extensive regulation and record keeping requirements. Not that big of a deal. You meet once a year and you keep it in a log book and you're good. Double taxation, one on corporate profits, another on dividends. Well, if you're paying yourself a big enough salary, maybe those dividends are going to be smaller. Filing for incorporation in North Carolina. Contact the Secretary of State, Corporates Division to obtain paper forms to complete to begin your filing process. Forms are available on the Secretary of State's website. Your corporation's name must include the following words or abbreviations: company, corporation, incorporated, limited, CO, Corp, Inc., or LTD. All right, filing for it again continued. North Carolina-based corporations must submit the domestic articles of incorporation form, $125 fee. Out of state, it's going to cost you $250. Corporations are required to file an annual report due April 15th. Just did mine the other day. Got the letter in the mail. You need to do your annual report. Usually your accountant does that when you file tax returns. I went ahead and did it. S corporations. So once you file that corporation, you're automatically a C Corp. You have to file for this subchapter S of the Internal Revenue Code. To avoid double federal taxation, you can elect that S corporation. It will pass its items of income, loss deduction, and credits through its shareholders to be included on their separate returns. So you make good money this year, it's going to go through your personal tax returns, and you're going to have this personal tax return that you can show your banker and say, "Cheese, I want to buy that big house or buy the wife that new Tahoe." A friend of mine bought his wife a $110,000 Tahoe not long ago. He said the payments on it's like $1,500. He said, "Eric, our mortgage ain't but like $700." And he said the cost of the Tahoe is $1,500 a month. Crazy. But, with a good tax return, you can go and actually get the money to do that. I would never buy a $110,000 Tahoe, though. So hopefully he doesn't watch this lecture. But requirements for S corporations: domestic corporation with one class of stock, has to be North Carolina, no more than 75 shareholders. I mean, you're not going to have 75 family members that want to be a part of your S corp. And then all shareholders must consent to the S corporation status. So you and your wife, and if it's, in-laws or your parents or your kids, everybody's going to say, yeah, we'll do that. And it can be set up like you and your wife can own 90% of the company. And then you give 10%, 5% to each of your kids. Well, that 5% of profit and loss is going to pass through their personal returns. Use of a permitted tax year, and then you need to file a IRS form 2553 with your S corp. Limited liability company, or LLCs, and a lot of people are going, I see in the green industry, LLC. Shares characteristics of both sole proprietorships and corporate identities. Must consist of at least one member. So you have member and managers of your LLC, and you can be both. Offers some protection from liability for actions taken by your company or by other members of your company. It does not protect from liability for personal actions, though. So if you do something negligently or on purpose, it's not going to protect you. Federal income taxes are paid only on income distributed to members as ordinary income. Can be expensive to organize, and it does cost a little bit more than the corporations, and it does require more administrative work. There's some more papers that you actually have to fill out to be that LLC. Advantages: limited disclosure of owners, limited documentation, no advance IRS filings, no public disclosure of finances, limited liability for the managers and members, and ability to delegate management to a non-member. So your members are the ones that basically own it. They're the business owners. Your managers are the ones that are operating the day-to-day business of the LLC, which, like you said, you can be a member and a manager. But there are managers who are not members. So, you can hire people to be a manager for you. Tax implications of the LLC: depending on the number of business owners, the LLC is taxed differently. An LLC with one owner is taxed as a sole proprietor. So it's going to go through that personal tax return, which again can still be good, right? An LLC with more than one owner, so multiple members, may elect to be taxed as a partnership or as a corporate entity. You have that choice. Now, again, I would talk with your accountant. I would talk with your tax attorney. I would get their advice. I'm just telling you how, and I'm not telling you why you should do this. I'm telling you how you could do it. So that's when you need to seek the advice of, an accountant or an attorney. Limited liability companies are required to file an annual report due again April 15th of the year following the creation year and every year thereafter. So LLCs are good. Now, again, we're thinking about taking that C corporation down to S corporation, which is okay. I'm meeting with my CPA, not my former CPA, who's now just our bookkeeper. Our former accountant, just got tired of keeping up with his license. His wife passed and he's 80 years old. He's like, I don't want to have to keep up with it. I still love meeting with you guys and doing the books for you and stuff, but we're going to have to give it to the CPA to sign off on the returns. And I'm more than happy to do that. And I just thank you, Lord, that he decided to keep a few of us as clients. But joint ventures. A joint venture is a special business arrangement that exists when two or more companies join to undertake a specific project. The management is often assigned to one individual or company. brings companies together with complementary resources and strengths. It is important to consult an attorney when forming this type of venture to ensure all aspects of the risk are covered. And individual state contractor licensing agencies may have specific laws regarding joint ventures. Obtain proper licensing prior to beginning applicable contracting work. So we would need to call the North Carolina Landscape Contractors Licensing Board. We would need to call the Irrigation Board if we were joining together, right? We need to make sure that does the joint venture need its own license as well. So we'd have to check with the respective licensing boards, because again, what if an irrigation contractor teams up with a landscape contractor to do this huge industrial or business complex, where they need to share resources, they need to share employees, they need to share equipment. They can do it together, but they couldn't do it if they were not, forming that joint venture. Naming your business, choose wisely. The name you choose affects your customer's impression of your company. Do your homework. Contact the North Carolina Secretary of State, Corporations Division in order to file articles of incorporation and organization to determine name availability for corporate and limited liability companies. It's as simple as doing it. I had a student that was at the community college, when he took our management and marketing class. He did it in class. He downloaded the forms, drove down to Raleigh on a day we didn't have class, and got his LLC formed just like that. So it was good hearing his experience with that. He said it was very simple, very easy, and he didn't have to go through one of these online lawyer firms that will do it for you. He drove down there and did it himself. And so, but when you are choosing your name, do you want it to be your personal name? I mean, do I really want it to be Eric Jones Landscaping, Inc.? Do I want it to be the Elite Landscape Contractors, Inc.? It's totally up to you guys. It really is. It really is. But I think personal home builders, they use their names a lot, like John Smith Builders, Inc., because it's really John that the homeowner is knowing, and when they hear John Smith, they're automatic thinking, yeah, the home builder, the guy that's building the multi-million-dollar houses. But if it was, triangle builders, they're not knowing that person individually. So it's really up to you on how you want to be known and how you want to represent your company. So anyway, guys, hope that works. Hope I was able to present some good information for you. And like I said, as we go through life, things are going to change. We had set up the company as a C Corp and changed the name to transition some purchases of equipment to the new company because we knew Dad was sick. And now, I'm a C Corp. I'm needing probably some more better tax returns. Am I going to do that as a corporation? I'm meeting with my CPA this coming Monday, and that's what we're going to talk about. Plus, we do want to get back into the building business, and I want it to be separate from the landscaping. So, am I going to form that LLC, that S Corp, or stay with a C Corp on that? That's why I'm meeting with the professionals. So anyway, guys, I appreciate it. This class is good for one landscape contractor credit for licensing period ending July 31st, 2024. So it'll help you get credits for the next licensing year. Anyway, guys, I appreciate it, and I'll see you in the next lecture.